and welcome to today's webinar. This webinar on the Cattle Market Outlook is part of our monthly Learn at Lunch series. For additional information on livestock marketing, visit the eFarm Management website. I will copy the address into the chat box in the lower right corner. If you have questions for Dr. Peel during the webinar, please type them into the chat box and he will answer them. Dr. Peel, I'll turn it over to you now.
Alrighty, well, good afternoon, everyone, and thanks for joining us this afternoon for a little look at the cattle markets. So we'll get started here and cover some basics. I'll try not to take up all the time, so we do have time for any questions you have. Feel free to send those to me at any time, and if you want to visit after the fact, feel free to contact me and we can visit farther. So. You know, as always, we've got lots of levels of the industry that we're looking at. And so, you know, we'll look at the cattle market fundamentals here, you know, broader agricultural issues a little bit. But, you know, really a lot of the backdrop here is at the macroeconomic level and the global level. And that's where I think a lot of the issues are. Hang on just a minute here. I'm trying to hit the right button. You know, obviously we're in a very turbulent environment. I think, and let me just say this by way of kind of a summary to begin with, and that is that the cattle market itself is in relatively good shape. We know we have some supply challenges, cattle numbers and beef production continues to grow, and yet for 18 months or so, demand has been very strong and has more than covered that and has kept us in pretty good shape. So, you know, we're sort of sitting here inside the cattle industry feeling relatively comfortable, I think, with kind of the situation. However, the situation outside that environment is very turbulent right now, as you're well aware of, in all kinds of ways. And so, you know, and we're into some things now. We don't know where this trade war and tariff thing is going to take us ultimately. We don't know where NAFTA is going to end up at this point. We may be getting close to knowing something, but we don't yet. And so, there's a lot of uncertainty and a lot of potential for impacts that come from this level, and not a lot you can do other than monitor it and try to think about how you're going to respond if you know, these impacts. I won't say if there's going to be impacts. I think there's already being impacts. It's a question now of how those impacts you know, may develop further over time, how long they're going to play out, and exactly how they're going to play out. And there's still a lot of uncertainty about that. So, you know, again, within the cattle industry, I'm going to quickly cover this. I won't spend too much time on most of these things, but I want to hit the highlights so you have some detail about where we're at with the supply side of the industry. We'll quickly take a look at that. We'll look at the demand side, which, as I've already indicated, is really the key, has been for several months and will continue to be a key. And part of that demand picture is on the international side and the role it plays and will continue to play as we go forward. I'll take just a quick look at feed and forage markets as well as we go forward. So we'll run through some of these fundamentals. You know, by way of kind of summarizing where we've been the last few months and really compared to last year, you know, you can see most of the last 2 or 3 months we've been at price levels that were pretty close to last year. This is calf prices. We started out the year a little higher. We did come off of those highs. But we're sitting very close to last year's levels, and that's pretty impressive when you think about the fact that we've got another bigger calf crop in 2018. We've got more feeder cattle. We'll look at these other fundamentals as we go forward. But the bottom line is we have more cattle out there right now, and we're holding pretty well. The bigger feeder cattle markets, again, we did drop lower earlier, but we've bounced back to levels that are about equal to last year. So, you know, altogether, you can go back to about a year ago in April, really the beginning of the second quarter last year. We've been in pretty stable markets for a year, you know, or 5 quarters now, 5 to 6 quarters, and pretty good shape. And again, that's in a backdrop of growing cattle numbers. Slaughter cattle prices have had a little more shape to them, a little more interest. You know, a year ago we had this unexpectedly high peak. We did have a late summer low that was a little pronounced, took a while to recover from, but then we bounced back from that. And this year, you know, kind of a spring peak. We have had a low here already this summer. I think there's a decent chance that that's behind us now, that was the low for the summer. It's not a guarantee, of course, but at this point, unless something unexpected comes up that I don't see right now, I think there's a good chance that this low about a month ago now, 5 weeks ago, might have been the low for the year. We've got another 2 or 3 weeks really to get past Labor Day, probably to be a little more sure of that. But unless something happens in that time frame, then I don't really expect anything to develop as we go into the fourth quarter. We typically see these fed cattle prices, push a little bit higher seasonally. Box beef prices, again, as you get closer to the consumer level now, these wholesale values, following a seasonal pattern pretty close. We didn't have the exaggerated peak we had a year ago, but we did have a seasonal peak here. We dropped off of that. We had kind of an exaggerated summer low last year as well. I don't see that happening right now. In fact, if you look at the lows of the last few weeks, this chart doesn't reflect it. It's about a week old, but just in the last 2 or 3 days, we've started to see a little bit of recovery in those box beef values. And we're at a point now where, we're already buying or have already bought for Labor Day. Most of the midsummer doldrums, if you will, that affect beef demand are really behind us now. Of course, we've got generally some cooler weather right now anyway. So again, I think there's reason to be, somewhat optimistic that we can go forward here at this point in time. That said, we are throwing more meat at the market, and that will continue into the fourth quarter, certainly, and on into next year and through next year. One of the things that we can take a quick look at, choice select spread followed a seasonal pattern. We did have this early peak in the second quarter, in the second quarter. Last year we had this low that contributed to that summer low in box beef and fed cattle prices. It looks very much like we're already very near that bottom. In fact, it started to rebuild a little bit as well. So we probably won't see as much of that pressure as we did last year with that summer low in the choice select spread that was as low as the normal seasonal low, which happens in more like in February. So I think, again, a little bit more typical kind of a pattern here, sort of moving forward as typical. Cull cow prices is one place we've really struggled this year. Cull cow prices have been lower than last year since the second quarter. Tanked recently. Now they've actually bounced back just a little bit in the last week or so that it doesn't show up on this chart. But we've really struggled, and we'll look at slaughter numbers here a little bit. We've continued to slaughter relatively large numbers of beef cows. And we can talk about weather impacts and so on that play a little bit into that, and I'm not sure that they explain all of it. But this is a market that continues to struggle, and it may be something we want to watch pretty carefully as we get into the fall and think about our normal culling. If we have unexpectedly low cull cow prices in the fall, then we want to really sit down and think about what the odds are, maybe to think about holding on to those cows. And there's sometimes a real opportunity to add some value to those cows in a few weeks of winter feeding. Forage conditions, we've got, kind of a large area that's developed here over the last few weeks of mostly not real severe drought conditions. Now, that said, if you're in northern Missouri, you probably disagree with that. Even southwest Oklahoma certainly still has some drought conditions. And then there's a big area of drought still out in the southwest in the Four Corners region. And down in through central Texas, there's still a lot of areas. If you look specifically at Oklahoma, again, it's we were better than this, and then we started drying back down. We saw some of these lighter conditions start to redevelop in the northwest and some other areas. We've never really gotten out of it in the southwest, although we've whittled that area down a lot from its peak worst time, which was back in about mid to late May. We've actually improved over that time frame, but recently we've struggled. Now, that said, this chart was a week ago. It does not include any of the rain. I pulled the 7-day accumulation from Mesonet, and this just about exactly captures the rain that is not reflected in that previous drought map. So when we get a new drought map Thursday morning, it will go from last Tuesday to this Tuesday morning with new data, and this will all show up in there. So we're going to see some help in some areas. Unfortunately, not much in the way of help in the southwest, in the worst area. Some areas, some parts of it got some of it, but pretty spotty down there. So we do have some marginal conditions. If you go back to that U.S. map, how much of that has contributed to cow culling? I really don't think it's a lot. I think we've had to do some things managerially to get through this, to manage some limited feed supplies. It's certainly been a headache from a management standpoint for a lot of producers in some other regions, maybe even more so than Oklahoma. But I don't think for the most part this drought has resulted in significant liquidation. Now in the Four Corners region, perhaps so. It's been severe there for all year, really. But that's an area that just doesn't have a lot of cattle to begin with, so probably didn't change the national numbers on cow slaughter very much with respect to that. Feedlot inventory is about 4.3% above a year ago. You know, it was actually higher than that. If you go back to about March, we were 8% above a year ago. We've actually pulled that down. We're kind of holding cattle on feed year-over-year increases to roughly match the increase in cattle numbers, more or less. If you look at placements, the last couple of months have been very close to year-ago levels. As we look at these, if you sum up the first 6 months of the year, we've actually placed 1% less cattle in the first half of this year than we did a year ago. At the same time, if you look at marketings and sum up the first 6 months of the year, we've actually marketed 2.6% more than we did a year ago. And that's what helped pull that feedlot inventory down from an 8% year-over-year increase down to about a 4.3% recently. So what's the message in all of that? The bottom line, again, is that even though there's more cattle out there, there's more cattle coming through the system, we've done a pretty good job of moving them through the system and staying caught up. We're not backlogged. We don't have any lack of currentness that's plaguing the market generally. There's always a danger when there's lots of cattle, but the feedlot industry has done a really good job, in my view, not just this year, but really for the last 18 to 20 months of speeding up the turnover rate, moving these cattle through the system, and sort of making the best of a challenge that goes along with bigger cattle numbers. And so we've done a pretty good job with that. More cattle coming through the feedlot means slaughter's up. A year ago, it was up 5.3%. We're running about 3.3% this year, which again is roughly following the increase in cattle numbers, more or less. It's a number that keeps us caught up with that. The one surprise, probably the biggest surprise out there right now, is that year to date, steer slaughter is actually down fractionally from a year ago. There's a few more steers out there, so we keep expecting them to show up, and I think they will. We'll probably end the year with a year-over-year increase in steer slaughter of 1.5% or thereabouts. Heifer slaughter continues pretty large. Again, these are indications that we're slowing down herd expansion, so more heifers are coming through the system. We've got more heifers in the feedlot. We've had that for a year, and it's been showing up as higher slaughter numbers. So heifer slaughter is up nearly 9% for the year to date. It will come down some here at the end of the year, partly because it went up the end of last year. So on a year-over-year comparison basis, it's going to come down. We'll probably end the year with an annual total of heifer slaughter that's about, somewhere between 4 and 6% up year over year. I think I'm holding it at 6 right now, but it could actually come up a little bit smaller than that. Beef cow slaughter, again, as I alluded to earlier, has been large all year, although not large enough to really suggest any major liquidation from a drought standpoint. In fact, if we stay on this path for the rest of the year with, say, 11% year-over-year increase on an annual basis, then that will imply that our net culling rate of the beef cow herd is actually just back to normal for the first time in about 4 years. We've been culling less than normal as a part of herd expansion for the last several years. We're getting back to normal levels now. So this is not an excessive level of beef cow slaughter, but it's enough in the environment of growing beef production generally that it's really putting some pressure on that cull cow market at this point in time. The other half of beef production is not only slaughter, but carcass weights. Last year they were down sharply. We knew they probably would go up this year. The question was how much they would go up. So far, I'm encouraged that if you look at this, we had a few weeks here where we were quite a bit higher on a year-over-year basis, but we bottomed seasonally at a little bit sooner. Or a little bit higher level, I should say. And then we've gone up, and we're running pretty close to year-ago levels now. So for the year-to-date, steer carcass weights are up about 6 pounds. They dropped about, 11 or 12 pounds last year. They're up about 6 this year. So we're not back to where we were 2 years ago. Heifers are up a little bit more than that. They're up about 8 or 9 pounds, I think, year-to-date. But the bottom line is that we've got more slaughter and more carcass weights, but the carcass weights are not excessive in my view. So all of that's going to lead to some increase in beef production, but holding it at a relatively modest level. So we've got beef production right now for the year up 4.2%, 4.3%. If the carcass weights now they're going to get seasonally heavier from that previous chart, but on a year-over-year basis, if they don't go up much more than they are now, we'll hold to this level probably. If they go up more than that on a year-over-year basis, we could see this number push up to maybe 4.5%, something like that. So beef production's up. This level of beef production is a record level if we achieve it or something close to it. This level of pork production for 2018 that we're projecting now is a record level of pork production. This level of broiler production is a record level of broiler production, and so obviously all meats, which also includes lamb and chicken and other things, in addition to broilers, is a record level. We've never produced over 100 billion pounds of beef in this meat in this country. We got close last year. This will be a new record. So again, from a supply challenge standpoint, there's lots of meat out there, and that's going to continue to be an issue, and that's why demand is so critical, continues to be so critical, and will continue to be so critical as we go forward. Now, that said, we're not having to eat all of that increase in production in the U.S. Trade is helping us out here. We're on net moving quite a bit of that meat offshore. This level of total meat consumption is not a record level, unlike the production level, which is a record. This is the highest level of total meat consumption in over a decade. It goes back to about 2007. So it's a big number for anything we've seen in recent years, but it's not a record level. And again, that really highlights the other part of this demand situation, in addition to the domestic market, is the international side. So retail beef prices are holding pretty well in spite of all of that meat out there. Beef relative to chicken, which is the red line up here, is holding pretty steady at close to the record levels we achieved a couple of years ago, 3 years ago, really. That's a little surprising in the face of this supply of meat. Beef relative to pork is holding pretty well. That's the blue line down here. So beef demand appears to be very strong, even in this environment of plenty of available meat supplies. So to sum it up, cattle numbers are still growing, probably growing pretty slow. I've got about a 0.5% year-over-year increase in the cow herd coming January of 2019, but we'll continue to see a little bit of increase in calf crop next year, and feeder supplies on into through 2019 and into 2020. Beef production, as I said, is projected at a record level, and that'll push even a little bit higher as we go on into next year as well. Okay, 12-18. I'm going to move through this a little bit on trade right quick. Beef exports have been very strong all year, up every month. You can see, if you look at the major markets, the top 5 markets are all in positive territory. And for the year to date, we're up nearly 15%. Very positive influence on the beef side, specifically moving that meat, more of that meat offshore. So we're projecting this increase year over year from last year, and a little bit more increase next year. That one, I think, is subject to a pretty big question mark, depending on what happens with all of this external stuff in terms of the macro and trade situation specifically. That's subject to change, but if nothing does really impact it at this point in time, we would expect at least a modest increase in trade or in beef exports again in 2019. On the import side, it's the other situation which is also helping. Beef imports for the year are up only 1%. They were fractionally down last year, so we've been holding beef imports pretty steady for the last 2 years. And so we're not, so the net effect there is quite positive in terms of the domestic residual markets once you adjust for those trade impacts. So we've got a slight decrease this year from last year, and again, nothing else changes. Probably a further decrease next year. Australia, which had severe drought a couple of years ago, is back in drought again. They never really got out of it very well, and they're back in it again, and so they, that's going to impact them for at least another 2 or 3 years, depending on what happens. I don't know that they're having to liquidate a lot more because they had never really rebuilt their numbers from the last liquidation, but it's certainly a major impact for them. Byproduct values is part of the fed cattle value and ultimately value to the industry, and that's another place where we've really struggled this year. Really since the last part of last year, we've continued to struggle with weak hide values, and some of these other byproduct values have been pretty weak. Cattle imports from Mexico are up fractionally, about 1.2%. They were down earlier in the year. They've gone a little higher in the last 2 or 3 months. But, you know, holding pretty close to year-ago levels, I guess, is sort of the message there. Cattle imports from Canada are about unchanged in total. We're getting a few more feeder cattle, actually quite a few more in percentage terms, but that's a small part of it. But we're getting fewer fed cattle so far this year from Canada. And that said, oh, okay, I guess we better get to the important part. What are we looking at for prices? You know, long-term annual basis, we're sort of calling prices basically flat. You know, modest erosion perhaps. Actually, we've got, you're going to see the numbers here in just a second. We've got calf prices just fractionally higher on an annual basis. However, they probably won't be higher from this point through the rest of the year compared to a year ago. But nevertheless, all of these are holding relatively steady in a long-term view or an average view. For calf prices, specifically in Oklahoma, here we are in August. Steers and heifers, and again, I just got the calves on here. You know, we would look for about a 4 to 5% decrease, 4.5% decrease in prices seasonally to the October low. So you can kind of take where we are now and sort of figure what would happen seasonally. I think there's a fair chance that we'll follow that seasonal pattern. It really depends on sort of what happens with wheat pasture conditions from here through the end of September. If we get moisture and we get a situation where folks that are interested in stocker cattle can get after it, then we might actually have enough demand to hold this seasonal decrease a little bit less than usual. If we have terrible wheat pasture conditions, then the supply pressure of a slightly bigger calf crop this year may push these fall prices a little bit lower than that. So here we are. This is Southern Plains average. We've got calves in the fourth quarter averaging about 4.5% below last year at this time, but last year was stronger than expected. And on an annual basis, about 2% higher. We've got big feeder cattle a little bit weaker here in the fourth quarter, 7% down from a year ago. And, you know, but really holding pretty steady from third quarter prices. So not necessarily a lot of change this year from the second to the, or third to the fourth quarter, but compared to a year ago down. And slightly down. And fed cattle prices, you know, again, actually seasonally a little stronger from the third quarter into the fourth quarter, but down, you know, upwards of 4% and about that much down for an annual average. And I think I have one more slide here that shows, this gets ugly. So the red and blue line here are the same calf seasonal index we looked at earlier, but when you put the bigger weights of cattle on here, you have a very different seasonal pattern. So if you're interested in that, I thought I'd show you right quick. You know, big feeder cattle basically are at their peak right now. They peak in July and August, and then they typically decline into the end of the year. Actually have their seasonal low typically in about February, and then start to increase to the peak now. So with that, I've used my time pretty much as anticipated. If you have any questions, please type them in, or like I said, if you want to visit with me after the fact, feel free to get a hold of me. I'll be happy to visit with you if you have any additional questions. I will say, and I didn't put it in here, I've just started kind of looking at stocker prospects. I just showed you kind of the seasonal price patterns. Right now, I would say that it appears that there's some potential for stocker prices. If you look at value of gain in today's market, the most recent week, it looks pretty attractive. If that holds into the fall of the year, then I think stocker guys, if we have the forage, that's really the key. But if we get the forage, I think there's going to be some interest potentially in these stocker cattle. And it looks like there's an opportunity to reach out there to next spring with the current feeder cattle futures and maybe price these cattle and put a little protection on them against the margin that we could take a look at. So we're watching that over the next month or so, getting into these early fall stockers, but it looks relatively favorable at this point in time.
Thank you, Dr. Peel, for a good session. And thank you for including the survey link. We appreciate everyone's feedback. If you could click on the link and fill out a very short survey for us, it helps us know how we're doing. I would like to thank everyone for joining us today. I will take this chance to remind everyone that our next webinar will be on a foreign policy update, and it will take place on September 25th at noon again. We hope you can join us then. Thank you for viewing today's webinar, and if there are any other questions, we will see you next time. Goodbye.